the puts on this, it automatically brought up our 30 calls that we want to do, but we have to change the puts to the 25. Alright, let's just do one contract for now. Looks like we're going to have a debit of 85 cents on this calendar. And let's go over to the Analyze tab and see what this is going to look like. Let's go to right-click on the green boxes where you just, in your Trade tab, and bring up Analyze Duplicate Trade. You just do that by right-clicking. Click on Analyze Duplicate Trade, and then go right into your Analyze tab. Make sure you have single symbol selected down here under Positions and Simulated Trades. And let's see what this looks like. It's not a bad looking graph. It could be a little bit tighter maybe. The problem with Monster is that even though the stock price is only $27, we don't have any other options besides a $5 wide strike in between these. Let's take a look at July. And it's about the same for July. So what we might want to do in this case is simply do a single calendar. Let's take a look at just doing a, let's go back to our Analyze tab here for a second and delete that. Because I don't, and basically I didn't like that picture. The picture didn't look good to me. So what we're going to do is we're going to go over here and just buy a single calendar on the June 30 calls. And we'll leave it at one contract for now. Then we'll do the same thing. We'll right-click in the green area and go to Analyze Duplicate Trade. And as you can see, we like to be in the center of these trades, but this one is slightly off, isn't it? The actual price is down here to the left. So let's go to the 25. Let's go right at the money. And that one is a little bit too far to the right. So we may not have a good calendar here either, and we want this price really to be right at the center. And we're just not getting it. So this may not be a good candidate for us. However, what we can do is take a look at doing both a call and a put at the same strike price. And in this case, we've got the 25s there, and we can take the 25 and do a calendar on the put side as well. And let's take a look at that. Well, it doesn't help us at all. Even if we went down to 22.5, we're still way outside. We really ideally want to be in the center of this tent, not over to the right. So we're going to eliminate Monster from our potential candidate list. It was looking very, very good here. However, we're not getting the type of profit graph that we really need to make this a profitable trade. Let's go to another stock. Let's go to Autodesk. I'm sorry. It's ADSK. ADSK. Let's take a look at this. First, we're going to check the implied volatilities, and we've got 32.9 on the front month and the 34.9 on the second month. That's a negative skew of 2%. Now 2% is not too bad. If we do 2% or under, that's okay. So this may be a good candidate. Let's take a quick look at our profit charts for ADSK. And it looks like the stock had quite a downturn back here in March. It started coming back here, and now it's rallied up to about 40 from a low of 30. So, I mean, it's possible that this has some potential to it. It may continue to rise higher, but there's a 200-day moving average that generally either acts as support or resistance for most stocks. As you can see, it was support when it was back here in mid-November, and now it's traded through that, and that could be resistance up here. So let's take a look at their options. And we have the 40s, and now we have a little bit better strike price differential here, because we've got 2.5 points between strikes that we can play with. Let's go ahead and delete out this monster trade here.